Hey, what's going on, folks? Welcome back to the channel. I got a really special episode for you guys tonight that's going to last forever. Whether you're watching this now or a year or two from now, it's always going to apply, even though we can always evolve. And this is your measuring time, finding this video right now. So go ahead and smash that like button and consider subscribing to the channel. That way you don't miss any of these valuable drops. Today is going to be special only because it's a very touchy subject. And if you're listening by now, you know very well that there are 101 million types of ways to trade. But let me say something that might upset a few traders. Moving averages work. Open range breakouts work. The strat works. But none of those things by themselves explain why price actually moves. And if you don't understand why markets move, you're always one step behind, chasing setups instead of reading intention. Today we're going to talk about the strat, order flow, the cumulative delta, gamma exposure, institutional execution, trader psychology, and most importantly, why retail traders often lose because of structure. They lose because they lean on the wrong side in the beginning and they learn structure backwards. And that's what I want to talk about. This is the unique trading group where strategy meets mindset and discipline turns into income. And if you want raw trading understanding, smash the like button, comment your trading style below, and subscribe to the channel. All right, I engage, I talk back. Now let's get it. First of all, the biggest misconception in trading is that people think one strategy is superior to all others. The best indicator, the best candlestick pattern, the best setup, but strategies are not truth. They're only languages describing behavior, guys. So they help us interpret what already happened, but they do not cause price to move. Price moves because of liquidity, positioning, hedging, institutional execution, and human psychology. We ourselves with this knowledge create the pattern. How deep do you want to go? Now, because our candle printed a 2-2 reversal, the strat is powerful because it simplifies structure. But structure alone does not explain the pressure, and pressure is what actually moves the market. Now, what the strat does well, I want to take a chance to really give credit where credit is due, because it's not really fair to be biased on one side. The strat does work, and we can really tell where the benefit comes from. All right, it teaches three extremely valuable things. Listen up. This is what the strat teaches. It teaches first that market structure is important. It teaches that market structure. Second, it teaches time frame continuity. Time frame continuity. That means that a lot of time frames, whether you pick or choose 1 or 2 or 3 together, they're all aligning with each other with a continuing pattern, whether that's bearish or bullish, up or down. They align for continue, right? Time frame continuity. Third is decision clarity. For beginners, this is gold. Because suddenly the market really becomes organized for those who are new. You learn things about the strat like the inside bars or directional breaks or continuation patterns. And we can gaze these charts to see what we're saying here on the 1 hour on the ES. All right. Inside bars are bars or candlesticks, rather. If you trade the candlesticks, there are easier methods to trade without having the candlesticks on. But we won't discuss that in that video. Those things are very valuable. One of those things are Heikenashis. But here you can see some of those strat type languages: inside bars, directional breaks, continuation patterns. And just to give you a quick example before we finish this episode here, I just want to show you what an inside bar is. An inside bar, or one of these candles, are going to be on the inside as it exists, the inside of one of these candles. And so let's just find one, right? There has to be someone, candlestick somewhere, right? Inside bar. Okay, I just located one, and we're going to try this one right over here to the left. Okay, if you can see right here, I'm going to circle it for you. All right, this candle right here was a small inside candle. All right, not as smooth. When I see inside candles, I do like to see it more in the middle of these big candles. But if price closed on the inside of this candle, this low here, and then that would be considered an inside bar, and also it closed within the top of that range for that candle, and this would be your inside bar. All right, just wanted to show you guys that, because I know sometimes you watch videos and you get certain definitions and certain explanations for things that you don't understand. So I wanted to show you some visuals, because like I said, you have to give credit where credit is due on the strat, and trading strats to make it makes sense when you start. But here's the limitation: the strat tells you what price did, it rarely tells you who caused it, and that's the difference, and it changes everything once you realize that. All right, because these are the things that I wish I knew whenever I started trading. Now, why is order flow important? Why does order flow change everything? Remember, this is the strat versus order flow. Order flow answers questions that structure cannot. Listen up. Very important. Stick around to the end, because these are the videos that changes your mindset, and it begins to allow you to question your decisions as you're trading. You will remember these things. All right. Order flow answers questions that structure cannot. For example, are buyers aggressive or are they passive? Are institutions absorbing liquidity, or is it a breakout level? There are many levels on a chart that you guys can witness just right in front of you. If you wanted to look at a chart and say, well, where are the institutions? Where's the big money? All right. Case in point, you see all these candlesticks here on a 1 hour time frame. And remember, all of these candles on a 1 hour time frame represents 1 hour of movement. Each candle represents 1 hour of movement. And what does that price action tell us within these 1 hour candlesticks? They give us a high price, a low price, an opening price, and a closing price. All of these candles, some of these candles are bigger than others. As you can see, this one is bigger than this small red one. This being big green one here is bigger than that green one. All right. So where are buyers aggressive? Could it be the bigger candlesticks? Don't they seem more aggressive, more money, more movement, right? A big boom candle, right? What about institutional absorbing liquidity? You think they could be absorbing liquidity on these gaps here? Could be a gap here, right? And people that notice these simple line breaks of structure being broke, right? And they short the market once structure breaks, just to go and grab that liquidity and some right below the 21. Come on, guys, say it with me. ATM sound. You know how it sounds. Say it with me. To retest inside of our megaphone that we always talk about, how price swings back and forth between a pendulum swing. Okay, guys, this is really not too hard. As you practice, you understand these patterns and where we are. And so those big candles are exactly where the institutions are. All right, those are where the institutions are, and the gaps are where they're absorbing liquidity. That's just one area. That's one area where they're absorbing liquidity. You understand? So is a breakout real? How do we know if a breakout is real? These are things we want to know, because obviously I like to take high probability trades when I teach my group and I teach my students live in the Discord. And again, that link is down below, right? I like to teach them to take trades above this gray line, which represents a 21 EMA. The EMA stands for exponential moving average. And I like to take high probability trades, meaning I like to take them when they're above to the upside and below on the downside. Case in point, when we got below here, that was a good trade towards the downside. Not so here, right? And this gets back to the point of strat and order flow, assuming and not recognizing patterns like this rally-based rally, right? There was a nice move there, right? But we failed to break out above these key levels to retest these highs. And instead, we failed and we retest some of these previous levels right here in that liquidity pocket where price had to come and fill those gaps. Anytime there's a gap in price where there's no buyers or sellers, it creates an imbalance. And the market likes to come back and fill in some of those gaps. These are some very important things, all right? So these are things you want to notice, all right? Are buyers aggressive? Are they passive? Are institutions absorbing liquidity? Is the breakout real? Or is it just trap behavior providing liquidity? And what the behavior is from the traders, guys, the traders, me and you, everybody around the world who has a brokerage account, a cell phone with a trading view app or app to be able to trade on your laptop, on your computer or your iPad, anybody, all of us together are trading and we are creating these orders. So if we're making the wrong decisions, you can see that in human behavior. All right. So it's just trap traders providing liquidity. This is where cumulative delta becomes very powerful. That's right. Cumulative delta. Sometimes price moves up while delta moves down. That means absorption. Smart money selling to buyers who believe price is going to break out. That's what's going on. People who are not aware of this thinking, right? And if you're wondering, what does it mean, people who are not aware? That just means there are people that are beginners in trading. They haven't read a lot of books. They haven't studied a lot like maybe you have. Their only thing is they want to make some money, and it's exciting, right? And so they click buttons when they see green. They sell when they see red. And anytime you see price jerk back real fast, or you see it move in a direction that it really intended to go, right here, like going up, and you see that snap back, because people chased, they bought right here at that resistance level here, this little diagonal resistance level here. As you can quickly see here, I want to give you guys some accuracy. All right, smash that like button if you're enjoying this content so far. I know some of this content is kind of new if you're new watching, but we teach all of these things, guys. Don't worry, we simplify these things and we make it easy. So check out that link below, join us live, join the group, and let me show you how discipline turn into income, because we have people who are excelling at an exponential rate very fast, and it depends on their desire and they're willing to learn. For someone like me who wants to teach, and I do have proof of that, right? Just a couple of days ago, we had a new guy that joined us. He's from New Jersey, and I appreciate him, and he's doing really well off of the back, and I want to congratulate him and let him know, hey, I appreciate you, and here is some of the money that he made, a 300+% gainer. Very, very valuable, just following the guidance. Now, back to the lesson at hand here. You see this diagonal here, resistance, and somebody chased here. Remember, we were talking about how you can see somebody chasing right here, and then the market, this is a trading error. Somebody chased right here, all right, and then they got out of their position, all right. Somebody tried to scalp, they scalped short side, and then we got bought here on that higher low dip, and we bought. Right there is where we trapped in traders, and that's where you get that big candle. This is the trading error. The trend was up, right? We pulled back. Somebody thought we were going to all fall all the way back down, and this is what you get. That's one way of thinking about it. Now, you can rewind that if you need to, but we're going to move on because I think you guys are beginning to see the intent. You got to understand that smart money can be selling to buyers who believe price is breaking out. That's what I just showed you right here. Okay, so you will never see the candles alone. All right, you will never see that on candles alone ever. But once you understand order flow, you just see the patterns. All right, it's more than just seeing the patterns. You stop just seeing that. You begin to see intent. And when traders start seeing intent, trader becomes calmer. You become peaceful and calmer. You stop guessing and you start anticipating behavior. This reminds me of Mark Douglas, the Trader's Creed, to trade calmly, all right, to have a free mind. Because you don't want to trade from arbitrary beliefs. You don't want to trade with emotions, right? You want to make some money for some bills, this, that, and the third. It always needs to be a defined plan, all right? Always think about your entry, your exit, and your risk before you trade. You gotta define that. This really defines and separate the traders who are consistent and the traders who are not, all right? So we want to talk about gamma, all right? The hitting edge, all right? I love gamma because the gamma reminds me of the casino, all right? I got a bunch of players in the market. We got the house, right? The house always wins. If you don't know, the house always wins, and it's a very important thing to think about. And so this goes with order flow and the strat versus the order flow. These last segues I've been giving you are for order flow, all right? And so I want you to understand the difference. Here's something most retail traders never learn. Markets today are heavily options driven. All right, gamma positioning can influence price movement more than many technical setups. That's the truth. Let me say it again. Gamma positioning can influence price movement more than many technical setups. And the dealers, they hedge their exposure. Now, I want to show you something. The option chain, right? I just told you guys that the option chain really controls a lot of things. And here you have an option chain. Now, you see dates on the side, and you see numbers in parentheses, and you see numbers with percentages right here. All right. These represent expiration dates on different days in different months and weeks and years of time. For example, this is SPY. This is a ETF. It holds 500 companies of the best companies, right? And all of them are crunched inside of this company. So you get to participate in their growth on a stock chart if you buy into the ETF here, right? And we trade options. And with options, we deal with what? We deal with expiration dates. So expiration dates on options means that we have a certain amount of time for our trades to work in our favor. Are you guys with me? Are you with me? Let me know in the comments if you're grasping, if you understand. The expiration date gives us cushion. It gives us cushion to be able to say, hey, we expect price to go in a certain level because we notice a setup on a chart. We're spotting out high probability setups and we want time. So we expect price to move. And so we go and just choose, for example, 29 days away, as you can see, April 2nd, and we expect price to go to 690. And so we want to go to 690. We go and we check the price, we check the volume, and this is the Greeks in the option chain. There will be a separate video, so look out for the options Greek video. This is a step-by-step, kind of like a 101 type video for guys who want to know and girls who want to know more about the option Greeks. But I want to let you guys know how simple the option chain works as far as finding your numbers, finding your levels, clicking on them, taking the trade. All right. The options market controls a lot of things that people don't know. And this is the way you take your trades here. All right. I wanted to show you that. Now, why do the institutions hedge? A really big question. Why do they hedge? Well, price can accelerate rapidly. Volatility can compress. It's a thing, guys. Volatility can get really compressed, meaning tight, really tight before a big explosion happens, right? It's right in front of you. I hope you guys are seeing this. And by the way, what I'm teaching and what you see applies to any chart. This just so happens to be the ES, the futures market. Now, price can accelerate fast. Yes, it can. And volatility can compress. And we already talked about how the fake breakouts can appear. Well, reversals can happen extremely fast as well. So instead of asking, is this a continuation pattern? Is this a strat setup, right? A better question is, who is forced to buy? Who is forced to sell? Who's trapped? Who's trapped in the market? Because often moves become more like, let's say, how would I say this? The markets often move because of obligation and not opinion. All right. There's some people who have to buy back. They're trapped. OK, there's patterns that I teach. Right. But these traders, they're trapped, guys. And there's no way to really deny that the chart that you see in front of you, whether it's the ES or the SPY or the Qs or Tesla, there's no way to deny that the price goes up and down. The price goes up and down each and every day. You guys see that. You see that on any chart that it goes up and down. So what makes it so hard for someone to make money and for them to really capture some consistent gains in here? I want you to just think about that for a moment, to let that resonate on, if price is going back and forth, how come nobody can make money? The people that don't make consistent money or the money they want to make. Why is that? Let's think about it. And I want to say to you, because guys, listen, we create the patterns, the people who are clicking the buttons. Okay. That's what's happening. All right. The market literally, the way it's set up, this mechanism of a chart, right? It's human behavior, and the way that it's set up to gather orders, like the scale of things, right? A put call ratio. How many people are on one side and the other side, right? And they see these orders. You got to understand the brokerage account. They see the orders that we put out. And so if they see the orders, they can see the scale of who's long or who's short. It creates the patterns. What's more powerful? What's more aggressive? Where are the orders at? What's the contrarian inverse of what it looks like on a chart? When it falls aggressively like this looks like money to the downside. Oh, we're going to continue. But what do we do inside of our pendulum swing? All right. We understand that this is a range of emotion, right? We understand that this is the range of emotion. All right. And we have a pendulum swing here, right? Pendulum swings are right here. And we also have another pendulum swing. All right. And price swings back and forth. Guys, we understand these things. We understand that price moves back and forth. All right. We already talked about this on previous videos. Back and forth, back and forth. All right. And this is the behavior of price action. Showing you behavior of people who are chasing, who are trapped. That's human behavior. That is what's going on. Who is forced to buy? Who is forced to sell? Markets often move because of obligation, not opinion. Get that through you guys' mind. When you combine this with proper execution, which I teach my students, my tier 2 subscribers, execution, right? You can know all the fancy things, the strat, order flow, everything, psychology, your emotions, right? You can learn all of these things, entry patterns, exits, all right? But execution is the most important. You got to execute these trades and be able to manage your emotions as well while you're trading. So if you want to learn that, right? Proper execution, scaling entries, OCO orders, right? One counts to the other, and risk control. When you combine this with the knowing that the market moves because of obligation and not opinion, trading becomes mechanical. not emotional. Now, I want to segue over to a guy that I know, all right, Mark Douglas, all right, in trading psychology. One of the greatest mentors, I would say, is Mark Douglas. He really helped me in my trading career. Helped me start this group, helped me learn what things to look out for. And I wanted it so bad that it just resonated with me. And I've been doing it so long that some things come intuitive. And those who are listening that know that join my group, that seen the process and seen what's happening when we really dive deep and study and get into the charts. All right. It's all about precisions. We take less trades than most people, but the percentage gains are bigger. We focus on risk. We want to stay in the game. Blown accounts are not what we like to do. You understand? And Mark Douglas says something extremely powerful. Consistency does not come from prediction. Consistency comes from belief and probabilities, guys. A lot of this stuff is confidence. I can't explain the feeling I feel when I see a setup on a chart. Wow, it's juicy. I can't explain that. It's a feeling. But it doesn't come from prediction. It comes from a belief in probabilities. I've been doing it so long and watching the same patterns over and over. Great traders don't predict the market, guys. They execute their edge over and over again. I know it sounds fancy. We say, hey, guys, go take this number and the price is going to go there, and it goes there. But it sounds fancy and we're saucing it up, okay? I'm telling the truth. The jig is up. We sauce it up, but we're actually very detailed and methodical and mechanical with this. It's very, we're like a tactician, and we just gloss it up and say, go to this number. We do the work and make it easy for call outs for people in the Discord or who watch us on YouTube. But I am not a financial advisor. I'm only a mentor and coach, so seek professional help. Anything that I say, any movements, price action, or price payments you see anybody making profit does not mean that it constitutes to you, all right? But I wanted to make that be known because great traders, they don't predict the market. They execute their edge over and over again, guys. So what people call intuitive trading isn't guessing. It comes from thousands of hours of watching behavior. Eventually, your brain recognizes patterns subconsciously. So for me personally, over 10,000 hours of screen time created that intuition. And every mistake that I made as a rookie, it became the training grounds for my consistency. Let me say that again. Over 10,000 hours of screen time has created this intuition that I have. And every mistake I made as a rookie, just like if you're a rookie listening now, all those mistakes I made, it became the training ground for my consistency. You understand? So I want to give you something, guys, to understand and to take home with you. So grab your notes. All right, we're going to go back here to the ES and we're going to clean off this screen here. I appreciate you guys rocking with me thus far. If you've been enjoying this content, smash that like button and make sure that it travels to other folks so we can grow this channel together. And don't forget to subscribe to the channel. All right, guys, I'm dropping valuable gems for you. And just to let you know, if you're trading live or you're watching some of these and you're not subscribed and you're watching, but you're actually trading and making money with me, but I don't know about it, I want to let you guys know that I do updates on the SPY, the Qs and Tesla, or even Forex or the DXY or the dollar, right? On gold, commodities, silver, wheat, the futures market. I do the Aussie, right? All of these things that I do live so that you guys can see them the next day or the next week. Most of these plays and most of these things happen the next day or within that week or two, if it's not a swing trade, of course. But this guidance that I give out, if you're watching, you can pretty much expect me to give out a SPY or a QQQ level for you to actually go and trade that setup the following day. So I think that's very important to let you know. Now, as we're watching, I want to just bring to your attention. Now, we're here on the hour time frame on the ES. Now, it's four things and four pillars of trading alignment. This goes with our strat versus order flow. Remember the idea of this content, the strat versus order flow. All right. So when these four things align, trading becomes simple. All right. I want you to write this down and pay attention. All right. The four pillars of trading alignment. I call this trading alignment 101. Pillar 1, high time frame structure, your map. All right, period. The higher time frame structure, that's your map. Pillar 2, lower time frame execution, where you actually act. All right, pillar 2, lower time frame execution, where you actually act. All right. Pillar 3, order flow confirmation. Who is participating? Simple. Order flow confirmation. Who is participating? All right. Pillar 4, hope you guys are paying attention, taking your notes, right? Rewind it if you need to, but keep up, because this is going to change the course of your trading career depending on who you are. All right. Pillar 4, psychological neutrality. All right. Let me say that again. Psychological neutrality. Staying calm and objective. That's what that means. That's pillar 4. Psychological neutrality. Staying calm and objective. All right. When these 4 align, you stop fighting the market and you start trading with participation. All right. High time frame structure, lower time frame execution, order flow confirmation, psychological neutrality. Gotta stay calm, baby, and we gotta stay objective. All right. All right. Now listen, the strat versus how I actually trade. Let's be honest. All right. Looking at the chart on the ES, I still use elements of the strat. Here we go. All right. The cat's out of the bag. I still use elements of the strat. All right. All right. Don't get me, guys. Hold on. Wait. Hold on. Structure matters, but it's my map, not my decision maker. My execution comes from order flow, the cumulative delta. The delta is on that option chain that I showed you, right, with the expiration dates and how you can choose different time frames to give you your time to trade the workout. All right, those are where the cumulative delta, the delta is. All right, liquidity zones. All right, my execution comes from these things, the quality zones, gamma awareness, risk management. All right, remember, gamma is like fuel for an airplane, so it's fuel for certain strikes to strike. So all the airplanes I want to take flight with that strike, right? And risk management, the most important of them all, to me, in my opinion, is managing risk management, understanding risk, not giving money back when you make it. The strat tells me where price could move. Order flow tells me when participants commit. And when you combine those two things, probability increases dramatically, because understanding behavior beats memorizing patterns. So we all can work together, guys, is the end note. We all can work together is the end note. All right, we can't coexist together. And when you combine things to your toolbox in trading, you're able to pull them out in certain conditions, especially the intuitive nature that comes where you really don't think. It reminds me of the Trader's Creed by Mark Douglas. It's very beautiful, the Trader's Creed. All right, so I just want to conclude here, guys. Listen, if you're new to trading and this is your first time watching, or you just been wondering, trying to find a right home, just trying to get a footing in a trading plan around trading, to find consistency, right, to get yourself together, right, start with structure. But if you want long-term consistency, you must study participation. The goal is not the perfect setup. The goal is understanding the auction process. This is the auction, guys, buyers and sellers. That's where entries, exits, and reward are actually defined. Don't think perfect trade. Think, do I have high probability edge? And can I execute flawlessly? That's what you want to think about. That's when trading becomes calm, clean, and repeatable. Do I have a high probability edge? And can I execute flawlessly? You got to be able to execute, guys, flawlessly. Practice and work at this thing, all right? Because that's when it becomes repeatable, calm, clean. All right, take that chaos and bundle it into some structure. Add it with that intuitive order flow. Where are buyers aggressive? Where are sellers trapped? Where are buyers trapped? Where are sellers aggressive? Okay, this is the unique trading group where strategy meets mindset and discipline turns into income. Comment structure and flow below if this helped out. All right, like the video so YouTube pushes it to traders who need it. And if you want deeper mentorship, live executions, and institutional thinking more in a deep depth, all right, check those links out in the description. Subscribe to the channel, and remember this: the market does not reward the smartest trader. It rewards the trader who understands behavior. I'll see you guys in the next one. It's Coach UV. Guys, stay safe out there. Be blessed. Till the next time. Peace.